Greetings, Dr. Jeffrey Scott here. This is my weekend market update for March 10th, 2024. My email address for those who are new and others are hgsidoc@gmail.com. If you have any comments, feel free to email me or put them in the remarks section on YouTube. If you look in the remarks section, you'll see links to things that I talk about during the presentation. If you're new, hit the subscribe button, hit the alarm, and when I post these, you'll get notified. I do not keep a mailing list except for a small group of friends that I send things out during the week. So if you want to know when it's posted, you can check or you can hit the subscribe and the alarm. I title this, Will the Bubble in AI in the Semiconductor Space Sink the Markets? And I've been pretty loud about the different things that I'm seeing in the market. We'll look through them as we go through today, and things that suggest that we have a pullback. But as this market goes higher and you think about the economy's holding up, rates are going to come down most likely. Is it possible we avoid a major correction and what we see is just rotation? So I think there still is a discussion that can be had there. Disclaimer, this is for educational purposes only. Anything I talk about should be considered in the spirit of education, not investment advice. I am a doctor, not a broker. I am independent. I've paid for the tools that I use, and trading involves risk, and you are solely responsible for any decisions you make. Again, this is for purely educational purposes and not trading advice. Speaking of trading, this is the Wealth 365 event. I'll put this link in the remarks section. Would really appreciate it if you sign up under my name. It costs you nothing. I don't get paid, but they're very nice at the Wealth 365 to let me participate, considering I don't have a mailing list and bring hundreds of people. So if you could do that, I'd really appreciate it. If you like this video and you want to hear stuff during the week, on most days I'll post at stocksanddocs.com. The difference is I only have a few minutes posted, 5 to 10 minutes versus the 45 minutes that'll likely be happening during this video. I always like to look at the major markets, and what you could see here is looking at 5 days. There's a lot of red. So this is a difference from what we've seen over the last several weeks. The green, Bitcoin up 10%, gold 4.5%, 5% on silver, and 1.3% on bonds. So for the most part, the big movers were not equities. NYSE was up 0.9 on the week, and the Russell was up 0.5. So mixed market performance, and the leaders to the downside were the NASDAQ and the Qs. Qs down 1.5, the NASDAQ down 1.2. The spiders were down 0.2, but the RSP was actually up over 1%. So mixed markets, certainly favoring the broader indices. And if we look at the one-day performance, you could see that biotech was up 0.2, but all of the major indices, except for maybe the IBB, which isn't really a major indice, were down on the session. Which will be interesting because when I show you where the markets ended, the breadth wasn't that bad for a down session. And speaking of breadth, on Friday, 64% of the sectors were up, 53% of the industries were up, and 49% of the stocks were up. So even though the indices were down across the board, the performance from a breadth perspective is not that bad. 7 winners, 4 losers. If we look at over the last 2 weeks here on the bottom part where it says sector advance decline, you could see over the last 10 days all the sectors were up, 73% of the industry and 68% of the stocks. And when you look at over the 5 days, there's been clear deterioration or weakening, but it's not bad. And so as much as it feels like Friday was a bad session, and if you bought NVIDIA the day before, it was a pretty bad session. The markets are actually holding up here pretty well. Now, this is the market breadth view, and why do I get nervous about this market? I get nervous about this market because of the skull and crossbones, which are confirmed Hindenburg Omens that you could see going back now since the first one occurred in late January. These are often a predictor of a market top, and there has not been a major correction that was not preceded by a confirmed Hindenburg Omen. That said, often these things are 1 out of 4 are big. Often they're just mild or moderate. So if I look at where that Hindenburg Omen is coming from in a second, I also want to point out these blue arrows, which are Bangos, which is a irrational exuberance indicator in the market. Now, when I flip and I look at the NASDAQ versus the market breadth on the NYSE, you can see the NYSE is clearly extended from, as we know, or had a big run, not necessarily extended, but the NYSE has had a series of Bangos showing a lot of exuberance. It also has a confirmed Hindenburg in place, but really hasn't had a big signal from that since. If you look at the NASDAQ, you can see that's where most of the Hindenburgs are sitting. Now, think about the markets we're in, and most of the pressure we're seeing of late has come out of that NASDAQ. The other thing that I think is interesting, when you look at the breadth, and the yellow is stocks above the 50, the white are stocks above the 200. Notice how the breadth on the NYSE actually looks like it's improving here, while the NASDAQ breadth really is not. And there's a difference between the two. And as I started to think about, can we get through this without a big correction in the market? And how can I rationalize that considering what I'm seeing with the Hindenburgs and the Bangos? And maybe what we saw Friday is indicative of that, as the non-technology sectors actually were up. The equal weighted S&P were up despite the pullback that we saw. This is the Nick Drendel tool. I love having this on one of my monitors. It gives me a sense of the market. So a couple things I see here. Qs, spiders, and diamonds were down. We know that. IWO, the growth of the IWM was minus 0.29, but ARKK was actually up 1%. When I look at the closing range, they all close near the bottom. That's weak. If I look here, I can see that the Qs and the diamonds have now dropped below their 8-day EMA. That's new. If I continue, I can look at market breadth stocks above the different moving averages for the different indices here. And you can see technology, information technology is actually the weakest one. That's new. Down here, the number of new highs, new lows, and this will be another reason to remain bullish on the broader sector, or the broader spectrum. The new high, new lows are still green in all time frames. Over here, I can see over 5 days the winner was gold miners, solars, crypto, metal, mining, semis. Actually, despite the sell-off on Friday, 3.9% down. And the big loser was the big winner on Friday, but was 8.7% down on the week, was cannabis. Biotech, which has been super strong, up 10 in the last 20 days, was down 2.5%. So clearly changes are being shown here, especially this red that I pointed out. So questions, have rates peaked for this cycle? Wouldn't that be wonderful? You could see as the rates have come down, the market, this is just the spider, has gone up. This is the 10-year. As the 30-year has come down, the spider has gone up. Now, both the 10 and the 30 then ink back up without sinking the markets, but they've turned down now for a couple of weeks. Is there a recession in our near future? Well, the gray bars are recessions. This is the 10 minus 2. This is the 10 minus 3. When you go below, whoops, sorry about that, the black line, that's a yield curve inversion. When you come up above it, the normalization, well, that's when the recessions occur. Each time we came back above the zero line is when we see the gray bar. And this is going back to the 70s. 10.2, 10.3. The 10.2 is closer to reinverting or normalizing, but it hasn't. So if you want to believe we have a recession coming, and we always have recessions coming, they occur every cycle in the market, but it doesn't mean it's coming tomorrow. You can see that 10.2 is the closer. If we have a recession, gray bar, look at what happens before that gray bar. Each time credit becomes tighter. Credit becomes tighter. No sign of that today. How about economic activity? Well, the yield, this is the Philadelphia Fed Diffusion Index, and most, if not all, the recessions occur when this index is minus 20. We are above zero. So, do we have a recession in our near future? I'd be very surprised if it's imminent. Do I think we'll get one? Sure. If I was a betting man, and I'm not, I would think about after the inauguration of the second term of whichever president or ex-president wins. Right now, I don't consider it an issue that I need to worry about. Breadth was mixed. Stocks in white above the 200-day. Stocks above the 40 increased. That's a sign of the broader market improving. And when you look at 13-week new high, new lows, they actually were lower. So nothing excessive here in a mixed breadth as it says on top. AV divergences, AD, NYSE, no divergence. Qs, no divergence. IWB, the large cap 1000, no divergence. IWM, yeah, there was some divergence, but right now they look like they're pretty parallel. Here's a big divergence in the market. The NASDAQ has dropped. Well, the NASDAQ, has gone higher and higher while the AD line of the NASDAQ continues to go lower. So that is a concern, especially on technology stocks. So which stock group is the one most at risk? Technology, the NASDAQ. So again, is there a possibility that we just rotate, get a significant correction in technology, and then we go on to higher highs? I think that is a possibility, and I certainly would not negate that with the Hindenburgs and everything else that I bring up, show you that I am concerned about. So let's continue on. Current bucket, 70% of the stocks are above their midline, the S&P 1500. Is that bullish or bearish? That's bullish, but not excessive. Very few stocks are below the bands or above them. Very acceptable. Bullish without excessive. Hindenburg Omen. We've resolved the new lows on the NASDAQ. I'm starting to see some new highs. The last signal was on the 5th, and you could see here on the NYSE, common only, there's no new lows. That's not the sign of a dangerous market. NASDAQ is the one that has been concerning. Now, this one was interesting, and I always like to look at the last week. So just to give you sort of a sense of where this comes from, EdgeRater has a tool called the Warehouse Report. I can pick any list of stocks to study. I only pick those that are over $2 and 250,000 shares because that's the trading universe that I'll look at. I do the fundamentals each week on Friday. I store them on my hard drive. I've got them going back for years. And then a week later, I load that file into the program and I ask the question, how was the performance in the market based upon ERG? ERG is a combination of EPS rank, relative strength rank, and group rank. I'm a growth stock investor, and the week ending the 1st was a very good week for me. And you could see this curve, and ignore the tail and the head because this gray bar shows you how many stocks are there, and there's very few stocks at the head and the tail. But if you cut out the head and the tail, what you see is clearly a lower left to upper right. Growth is in vogue. Last week, cut out the head and the tail, we're going upper left to lower right. This was not a good week for growth. In fact, a week ago, EPS rank was best. This past week, earnings was bad. A week ago, relative strength led. This week, the highest relative strength lagged. So this was an interesting week in the market. Rotation out of growth, and perhaps it's related to some of those high-value technology stocks that had a tough session on Friday. Know your news and earnings. If somebody was to call me up and say, Jeff, what's the risk of the market getting obliterated and you being wrong? I'm not wrong because I'm still looking for a correction, but the correction being broader and not narrow. Well, the big risk is what we have on Tuesday and Thursday with the CPI and PPI. We got some data that matters on Thursday as well. Monday and Wednesday, nothing. The inflation is the key. If the inflation comes in hot, then I think all bets are off. If the CPI and PPI come in as projected or rationalized as not being bad, I think the markets can continue going higher. That is a risk in the market. Another risk are earnings. I think anybody that's in the market, whether you're a short-term or long-term trader, you know that this has been an unforgiving earnings season. If you have good earnings, you get praised. If you don't, you get slammed. Some expensive stocks like Dick's are coming. Ulta's been weak of late. Be interesting to see what happens there. This is my quote in the lower right-hand corner. It's a judgment call to hold stocks over earnings dates. It is bad judgment to not know when your earnings date is scheduled. Market thoughts, you can read it and stop it if you want, but there was a sell-off on Friday of some of these high-flying stocks. I showed you how the NYSE and IWM actually were higher on the week. The NASDAQ Qs and spiders were down, yet the equal weight RSP was up. So the broader market, aside from mega caps and semiconductors, enjoyed some buy the dip action, especially in the later part of the week. Lots of market movement events. There were some earnings reports that were received. Target, Costco sold off a little bit, AVGO. We had economic news. We had the semi-annual monetary policy speech by Powell to Congress. You know, longer for later, but cuts coming. As I said earlier, we saw growth lead a week ago, and this past week we saw value lead. That's rotation. So the question is, will we see a big sell-off as predicted by the Hindis, the Bangos, the AD line divergences? And as I said, maybe we see a rolling correction while strength emerges in the broader markets. Thus, at least the NASDAQ can fulfill its destiny of the confirmed Hindis without seeing the market itself roll over. I continue to play the market we have. There are clear strength areas despite weakness in big cap tech. If you watch my stocks and docs, shameless plug, you'll see that I've been trading biotech, gold, and Bitcoin derivatives the past week. MicroStrategies looks just like NVIDIA at SMTC. Is it SMTC? SMCI, I'm sorry. The dominant market timing signal I'm going to show you still longer. The shorter one's mixed. So how am I trading right now? I've got some cash. I'm waiting for a big dump. If I don't get one, I'll buy later on. But if I get a big dump, I want to have cash ready to spend. I have bought, as I told you, some of those areas that I've been buying. I explored some short positions. You can go short things like SOX. SQQQ are short semiconductors and short the Qs. But overall, I'm still net long this market. Again, shameless plug. If you like this stuff and you want to see more detail, come to my Wealth 365 presentation. I'm not sure which day it'll be in April, but if you register, you'll get all the information. It doesn't cost anything. And now let's go look at some charts. All right, so let's kill that. All right, so here is the week we just ended. This yellow line is to represent kind of sort of where the market closed the prior week. And you could see that means we've actually finished narrowly down on the week. And if I went back, and I'm just looking over here on another monitor, on the week, the S&P 500 was down less than 1%. So we did not finish down very much. If you look at the week, Monday, we were waiting for news, and the market was flat. Tuesday, we got the news, and the market sold off. Wednesday, we had a rally into the close. The market gapped up and really closed, up and down, but didn't change much from the gap. Thursday, we gapped up and we ran higher. And then Friday hit and we traded off. And so kind of a round trip back to below where we started the week. So a mixed week at best. Now, let's just jump into my weekly market timing model, and you could see we are at new highs, or in the range of new highs on the spider, in the range of new highs, although not at a new high at the Q after the sell-off on Friday. The Russell well below all-time highs, which I think is even higher than this point here, and the diamonds are right off all-time highs. The Bongo, which these are weekly charts, so weekly Bangos green on all of them. Each of them are above their WMA 30 period, so we're in the main direction that I see in the market right now is long. Now, people may say, Jeff, the Hindenburg Omen is not typically traditionally calculated on the NASDAQ. You're right, it's calculated on the NYSE. But think of the difference in makeup between the NYSE and the NASDAQ. So I actually can show you what happened at the market top in 2021, 2022. Each of those red lines represents a week where we had a Hindenburg Omen. You could see early on we had 4 in this week. We had 1 there, 2, 1. So we saw, these are weekly charts, a series of Hindenburg Omens occurring before and after the top. And then you had the breakdown below the WMA and a red bongo and a clear sell signal in the market at a level that we have just gotten back to up here. So is this the standard way of using the Hindenburg Omen? Absolutely not. But if it works, it works. The daily market timing is not as simple because you'll see we've got a red bongo on the daily Qs. We have a red bongo on the diamonds. I'm not ready to throw in the diamonds yet, but we're right on top of the moving average. We're above the moving average on the Qs. We look fine on the spiders and the Russell. Um, I think that again, the main direction is still higher, but this tells me we have more risk than we did when we were on long on each of these signals. Back to the indices. Let's take a look at the daily on the S&P 500. And you could see we've got a divergence setting up on the S&P 500. We've got divergence setting up. This is automatically calculated on the Qs. We were down 0.6 on Friday on the spiders. We were down greater 1.44 on the Qs. Notice a bearish engulfing pattern. And there is a trend line here that we basically broke down from or failed at. I think the Qs are worrisome here, or potentially worrisome here. A pull back to the 50, which is in the neighborhood of 445-ish. Excuse me, that would not be 445. The neighborhood of 425 would certainly not be a surprise. The diamonds are in a consolidating period. They were down only 0.12 after shooting up to begin the session. And then if you look at the Russell also had a long red bar, but because it had gapped up to start the session, it was down just minimally. The VIX in the setting of some market weakness. Let's take a look at the weekly VIX. You could see a bullish bar up 12%, so that's something to watch. But it's not hard to just look at this and say, man, the VIX is weak. I mean, we have pretty significant resistance, and we'll see if we can break above that before we even get that excited. If you're bullish, you want to see the dollar and the 10-year stay weak, and you could see the dollar was up 0.04 on Friday, but for the week it was down significantly. In fact, if we look at a weekly of the dollar, you could see on the week the dollar was down almost 1% using the UUP. Commodities, you could see here again, why did I say I was long gold? Because gold came to the top, materials came to the top, and gold had a massive breakout here. Is that a shooting star? No. I think there's too big of a body, but I don't like that topping candle. That worries me a bit. You got a doji here on silver also after a big run up. So silver was down a little bit, 0.04%. Gold was still up a lot on Friday, 0.85. Oil is consolidating here. They had a nice run up and are weakening, and we don't talk about natural gas. And then again, if you're bullish, you want to see the 10-year down. 10-year was down a little bit, green candle, but it was a negative session, and you could see that it's come off. What is this area here? This is just a line that I put in, and every time I try and fix this, it does the same thing, so I leave it alone. But this is an area that we had failed multiple times, and we failed again, so resistance. If I look at some of the breadth, what we're going to see here, and this is kind of a big change, especially here with the RSP starting to outperform the spider. That tells me we're broadening out. Not as much on the Qs, but still a little bit. We're off the lows there. If we look here at XSD versus SMH, it's just looking at a broader semiconductors versus the cap-weighted ones. And you know what? The fact we're going up is trying to tell me that the broader ones are outperforming the cap-weighted, and that's where some of the strength and the recent weakness was. This one here looks at TLT versus spider, and those have been here before know why I look at this. If I bring that up and I put this on a monthly now, this thing spikes. This was 2020. If I push it back a lot to like 2008, it spiked here. This thing spikes during times of economic hardship. And are we spiking now? No, no sign of a recession. Let's go look at the sectors. This is an hourly. I'm going to be spending some time to see if I should broaden this and maybe look at daily instead of hourly. I look for two things. I look for pointing up to here. When I'm pointing up to this upper part of the chart, and these are ratio charts of the individual S&P sectors versus the spider, when I point up here, that tells me I'm stronger than the spider. The blue just tells me that I was up the last couple of hours or days. So materials are moving up, have been some of the recent leaders. Communications turned up, but not as strong over the last period. Energy trying to turn up. Financials sort of stuck in the middle. Industrials definitely picked up. You could see they've moved up a lot this week. Technology has moved down. That's probably the big change here is technology has weakened. Now, if we got a recession, don't you think staples are going to lead us here? So if I make this big, and I look at XLP versus staples, is it leading? Well, it did strengthen a bit, but it's really not doing much. So that's a good sign if you're worried about an imminent recession and major correction. Now, it is higher. Real estate is higher. Utilities is higher, and I think that goes along with some of the weakness in the cap-weighted indexes that we saw on Friday, something that I'll be watching. Discretionary has come way off from where it was. This here is LABU. It had a weak session, but you can see how much LABU has run since late in the year. And XLV, which like staples, utilities, real estate is defensive, does the same thing, picked up a little bit this week. So we'll see what's leading as we look at some of the other tools. Stock scanners, let's just do a very quick heat map of what's working in the S&P 500, and what you see is a sea of red. Just to remind you, if that looks different than you think it should, this specific program, Wealth Charts, good or bad, I'm not saying that's the right thing or not, includes the after hours action when it does this. So if a stock has earnings and takes a dump and drops 10%, but it was up 8% during the day, it's going to be red, even though it was up during the day. But you could see a lot of the large tech cap was weak on Friday. Apple has led this market lower. And one question has to really be, is it done going down? It's got about 3 bars that have the same low of the day. Is it going to put in a defense here, and will it increase in the price of Apple stock or recovery in Apple stock? Will it drive the markets higher? I'd be watching it because I think the markets are going to do what Apple does, is one of my concerns or thoughts. Wealth scanner. Let's take a long list of ETFs that some of our indexes, some are sectors, some are themes, and let's see what comes to the top. So first thing, I've got a whole bunch of things above 800. Check. That's an improvement in the market. If this market is selling off hard, if what we saw in NVIDIA and other tech on Friday is a predictor of tomorrow, which could be, except tomorrow, well, right now, tomorrow's Sunday. I'm on the Mountain Standard Time. On the East Coast, I think we're already on Sunday. But why are we getting stronger? Well, what's up here? Gold, real estate, energy, gold, REITs, dividend payers, energy, utilities, aerospace, data center REITs, oil producers, oil equipment and services, minimum volatility, whatever that is, and capital markets. Almost every one of these except for capital markets is above 800. What did we see there? We saw gold, we saw energy, we saw real estate. Gold, energy, real estate, and then I guess the REITs, some of the data center REITs. So I know where I want to look. So one of the things I love about wealth charts is the scanner. Now, I get a lot of questions. Is the scanner available on other platforms? Not really. I think what Wealth Charts does is special. However, I have built the scanner in TradeStation, and I can add a few fields. So I will look at the scanner here. The other option that I have is TradeStation. Why should you use Wealth Charts versus TradeStation? Wealth charts is easier, and wealth charts is all in one, and you have to build the various ETFs and stuff in TradeStation where it comes out of the box in wealth charts. So that's why I present with wealth charts, but I do have access to this in TradeStation, and the indicators I show you I have in TradeStation and I have in TradingView. I go to wealth charts because keep it simple, and for most people, myself included, wealth charts is really a pleasure to use. Um, so we said gold, real estate, and energy. So let's look at gold and silver. Now it's had a big run. We might not find any stocks that are at good buy points. But let's look at gold and silver. And I built special ETFs, the components. So really not much here. I'm looking for pullbacks and uptrends. The stock that we bought early in the week, or prior week, I don't know which day I bought it, was AU. We talked about this one session after another. And why? Because we liked it here. So this would have been the prior week because 1, 2, 3, 4, 5. This was Monday. This was the prior Friday, a breakout on Friday. We talked about this all week. Looks great. Hard to buy it up here. Look at the high jump. It says it's too extended. Another one that I've been playing is Eldorado Gold. Not as extended. Potentially is still actionable up here if gold does well. You can see the high jump's only at 33. It's given me Dr. Gold way below the 200, so this is a laggard, and HMY Harmony, which is looks great as well with a nice breakout, but my guess is we're going to find that the high jump's high and it's at 99%. Now, I have other scans built in here. I might want to look at things that are leading, so what things have had the biggest move, and BVN has had a big move up here. Looks like it's getting set to run again. When you see this sideways movement, sometimes you worry about a takeover, so I'd want to look at that. Osisco Gold, a nice move as well. Again, I want to buy them down here when they pull back in an uptrend. It gets tough up here. You can see the high-low jump telling me it's extended at 100. So I'm going to go back to my pullbacks in uptrends, and I'm going to look at just GLD, which is the underlying gold. And what we're going to see is it's had a huge run, had a nice breakout here, which is when we started buying gold. And you could see at 100, it is extended, somewhat of a topping tail. I'd be a little careful here with gold. And GDX, the gold miners lagged. So these look less extended than the GLD does. High jump is at 56. We said gold, we said real estate, and we said energy. So energy, and the MLPs have been strong for a while, although they weren't at the top this week. And we just rank and AQN, Algonquin Power. Don't know anything about this. It's a nice little pattern here. Massive volume the last couple of sessions. It's extended by high jump, but when you're this close to the 200, you have to ignore it. It's coming out of a squeeze. Relative strength and OBV look good. So the question I have here is, one is, was there earnings in here? And right now, that's not working in. You can see the last earnings are 0 in wealth charts. The 200 would bother me. And so I mentioned that I have some stuff in TradingView. And one of the things that I put in TradingView, let me go back. What's the stock? This was AQN, is my programmer, Praveen, who's brilliant. I wanted to get a look at fundamentals. So AQN, Eloquent Power. So what I have up here is going to open up is going to be a box for the fundamentals. It tells me the last earnings was November, so the next earnings date's not to the 9th of May. I wonder if the earnings came out on Friday, so the box hasn't been updated yet. So on Friday, earnings came out, and you could see reported 16, estimated was 14, which is a 12% surprise. A little bit of a surprise on revenue that probably explains the jump. Not that exciting to me, to be honest. So I probably am not going to worry much about AQN. American Semiconductor Corp, much more attractive looking stock to me, a nice uptrend. Is it too far extended? It's not. 35 is not bad. Um, Relative strength looks great. OBV looks great. It's not that exciting to me, but that was one. So all energy is not really doing much for me. Tidewater is one I liked. Tidewater, and I'll show you its fundamentals, but Tidewater is in an uptrend, and it's giving a little bit of a flag here. And when I see flags like this, I get all excited because I like taking bull and bear flag breakouts. So I might just draw. Let me try that again. Right click, drawing tools, lines. I forgot the trend line piece. Let's just draw something around here. So a break above this line might be interesting. So something to follow. Now, this is one that has great fundamentals. TDW, I believe. TDW. We could see earnings came out here and they missed, interestingly. So you could see here's the growth rate, massive growth rates. Look at these earnings, quarterly growth rate percent change. It's not beat the numbers. In fact, it's had negative surprises. Great revenue growth, just they're very bad at predicting. Next earnings are not to May. Estimate in May is 66 cents. And you could see we have distance from various moving averages. How long ago we touched that moving average, what the 52-week high is, what the 52-week low is. The fact that 0 weeks, it's hitting the 52-week high here. To me, I love to have these fundamentals, and that's why I've got TradingView sitting in the background. So that's Tidewater. That one looks interesting. I did find some stocks that look good today. So far, we're striking out. Let's go back here. Anything else? That Earthlink is an MLP, and I think it pays a 5 or 6% dividend. We'll do the same thing with TradingView and take a look. And you could see it had Rob Hoffman's launch indicator here, a target up here in the 14 range. That's not a big move, not extended. Relative strength and OBV look okay. So let's just look very quickly at ENLC in TradingView. And I can make the font smaller on the, but we're not looking at the chart as much as I'm looking at this. So you could see its earnings are out. Next ones are April 30th, so they're coming up in 53 days. I think what's good about this stock is dividend. I can't remember if we put dividend here. Yes, 13 cents. So 4 times 13 is 52. Praveen, if you're listening to this, I want to switch this to dividend yield. 52 cents on a $12 stock is a 4%, 4.5% dividend. So a nice dividend payer. Growing revenue, not so much on the earnings side. Back into the program. The third thing was REITs. So let's drive down here and see if any of the REITs are giving me a signal. And again, I am not looking for the strongest stock in the market here. I am looking for stocks in strong industry groups that have pulled back and are now starting to move higher. We'll go bottoms up in a few minutes. I don't know, gaming and leisure, it's below the 200. I don't usually buy below the 200. INN, Summit Hotels. A lot of these hotel stocks have had nice runs. Don't know much about it, but I did like Prologis. If you drive down the highway and you see these big warehouses, you're going to see a lot of them are owned by Prologis. It pays a dividend. Let's go look at PLD for the fundamentals. And again, this is not something you're going to find inside TradingView. It's a paid indicator, so if you're looking for it, you're not going to find it. So PLD, it's due April 16th, so 39 days away. It has going back 1, 2, 3, 4, 5, 6, 7, 8, 9 quarters. It's had a surprise on revenue every time. It's had one miss on earnings. Boy, that's pretty strong. It pays a dividend of 87 cents. I don't know if that's a quarterly dividend. So there's a small dividend. It's a big stock. It's $135. So earnings are not yet out. Let's go back into wealth charts. So this one I like. This is my EMS signal that fired on Thursday. I've got a breakout momentum bar from a squeeze. I'm not extended, and relative strength and OBV both look like they're turning positive. PSA, one of those storage companies, also looks interesting. It took out its 50 on a gap up. It has great volume. Looks like it's coming ex-dividend soon. It has, there's your volume and momentum with a breakout on the prior bar. Coming out of a squeeze, not extended, relative strength and OBV. Probably if I put it all together, this is one of the best looking charts I've showed you today. American Tower, this one, when the market suffers, this one suffers, but this one looks like it's breaking out. Just came out of the squeeze. It had a wealth signal here. Um, Anything here that I remember? Is that Camden here? Property. This one looked interesting. Why did it look interesting? Because it just took out its 200. You might want to see it take out, move up a little bit and take out the close on this bar back here. But you've got two launch indicators that fired, which are very good predictors. It is not extended. Relative strength OBV look good coming out of a squeeze. So in the REITs, I like that one. Crown Castle is one of these data center REITs. Broke out above the 50 a couple days ago. Just came out of a squeeze. This is one that's probably worth looking at. I probably don't like it as much as I liked the PSA and the Camden. All right, so I've looked at these groups that are starting to work. Not a lot of pullbacks that look interesting, like they're ready to run. So let's go into the combo, which is a list of strong stocks from a number of lists that I use. I also will put, for Wealth Charts user, the code to import it into Wealth Charts. Now, some of these at the top, IMMR, earnings play, SWBI. I thought maybe it would be related to State of the Union. But I think that it turns out it was an earnings play. In fact, again, can't wait till this is fixed in Wealth Charts. One of my favorite features was it plotted the earnings like that. But you could see it had a 73% surprise on earnings. All right, a small surprise on revenue, and it pays a dividend as well. So that was what drove Smith & Wesson, but do you want to chase it here? Almost always, almost does not mean every time, but almost always after a move like this, you get a little bit of a flag, and then it can continue higher. And personally, I'd rather wait till it breaks out of the flag before I buy it. Now, it's not to say it's not going to go higher right away. SNDX is a pharmaceuticals, or I think specialty pharma. This one had an EMS signal. It's had a big run up. It's not too extended. Relative strength and OBV look good. It had three dots. It had volume, breakout, momentum, and an EMS. That looks great. It's above its moving averages. So like that. CleanSpark, this is a miner, Bitcoin miner. I used to think it was a battery company by its name. And this one is, Bitcoin goes higher. This is one that you might see go higher as well. In fact, I forgot to point out, Bitcoin here had some turbulence this week, but Bitcoin ended the week strong or I think it's an all-time closing high. So back here to the scanners. Alley, which is a financial stock. EMS signal after a base. Good volume, breakup momentum from a squeeze. PSAR reversal. Not extended with relative strength and OBV looking good. I like Alley, and all of these you need to be checking out when earnings are. I think my number one stock as I look at the market to come up with is NBIX. Why do I like it? Big uptrend, a pullback, consolidation, and a new breakout from not a long base, but a base going back a month. An EMS signal the day before, a breakout over the 50, Volume was decent. Breakout momentum from a squeeze, a PSAR reversal. The daily bongo turned green. I'm not extended. And relative strength and OBV look fine. So of all the ones I showed you, probably the highest on my interest list for buying is going to be NBIX. People get mad that I don't say the ticker. They don't get mad. They just ask me to say it. I don't think people get mad at something that's free that I worked this hard to put out. So that's some of the things that I like. Let's look at semiconductors, and then we'll look at a couple of the big names that are showing some weakness. So semiconductors, none of them are pullbacks. Of course they're not. Are any of them retracements in a downtrend? GFS, Global Foundries. So I like to short stocks or buy puts on stocks that have worked their way back into the moving average complex. Only one of them actually has given me enough dots to show up on my scan. Let's go into all, I want to go look at, let's go into a watch list. And these were some of the stocks that I put into my short watch list. Let me tell you what a short watch list is. I sit there during the day and I have a full-time job, so I'm not trading all day long. But inside TradeStation, I'm going to put a number of stocks that are going to be, to me, indicators of what this market is doing. My dots indicator, this tells me how many dots real time during the day, up and down. And this here is sort of a magic thing. And it's the, are you above or below your moving average compared to your relative strength compared to the S&P 500? And I find that strong stocks, the daily is always green. And that's why I look at relative strength in our wealth charts. So there are a number of stocks. Let's just look through some of them very quickly in wealth charts, and then I'm going to say goodnight. We're already at 47, and it is, whoops, I hit the wrong one. I'll hit this one. There we go. And no particular, let's just do them by weekly percent change. MongoDB. This is one that's been a long leader. You could see how the big uptrend move, it's broken down the last several weeks. It broke below the 200. What do I expect this to happen after big volume break? My expectation is this thing is not going to continue going down. My expectation is that this thing runs back up at least into that 200, and then I'm going to see what happens there, because if it does that and then comes down here, it's going to give me a new break, a new place to short it. I don't think with this kind of a fall and that kind of volume right there, I think I'd give it, I wouldn't short it on this. But notice the high-low jump is now getting to where it's interesting. Dropped significantly. Getting close to minus 100 where you might expect a bounce. So a reason not to necessarily short this. And look at, if you go back here, look at the breakdown in relative strength and then the breakdown in volume. Mirus is a healthcare stock. Now, do I short this one? No. But if this thing pulls down a little bit more and then retests and fails again, that might be interesting. I don't short all-time highs. But this is going to give me a signal of what the market's doing. Look at FNGU. Am I ready to short the FANG stocks? I am not. But what if this thing moves into the 17 and fails? It might be interesting. A couple of these is not time to go through. Elf Beauty is starting to break down. I think it may have earnings this week. I'd want to check. AVGO, breakdown on earnings. Would I short it here? No, I expect it to bounce on the 17. ACLS, here is one that ran up and failed and broke down. This one looks to me more interesting on the shorting side. It's not extended to the downside. It broke below on relative strength and OBV. Costco, on earnings, a pretty big move down. Now, we could have a strong start to the week and everybody's going to be happy and these run right back up. But I want to watch them. That's why it's more of a watch list to give me a sense of what the market's doing. Alta does have earnings this week. Boy, is it set up to break down. Um, ASML, again, it's hard to short up here, but I'm seeing breakdowns in leading stocks. Nvidia is down here. It was up on the week. How could I have this up here? Big bearish engulfing pattern on a stock that we know it was extended. It just came off the minus 100. Um, would I short it at the open on Monday? I'm not. I expect it to rally. But will it make a double top and fail? Or does it keep going lower and bounce? I'm going to be watching NVIDIA. SMCI last weekend, I called out, everybody already knew that it was added to the S&P 500, and even though it was very weak, we said it was going to gap up to all-time highs, and it did. It actually traded higher. This thing makes, well, let's just, for the sake of interest, look at the fundamentals on SMCI. This was when you buy it. You had all the dots firing, a breakout here. I have a hard time buying it down up here. This thing is expensive. And you can see the high-low jump is maximized. Earnings are April 30th. Forward PE 55. And this is the excitement. Look at the surprises on earnings and revenue. Lots of surprises. So a lot of people love this. It's a little bit too rich for my blood. This stock has run up from 87 in the 52 weeks. What a move. SMCI, part of the AI craze. Does it look like the AI craze is over? It doesn't on this stock. And anything else I want to show you here? Advanced straight edge, just a lot of stocks. Now, a breakdown here, it's a nice run down to the 50. But so I'm watching these. Now, the big thing it's going to show me is not, oh, I'm going to go short this stock tomorrow. If Monday opens and all these stocks are red, I know the market's going down. And the other thing I'll be looking at are the contras, and I mentioned two of them. Be careful, these are not investments, they are short-term trading instruments, and there are, for those that don't like to short, there are these things called contra ETFs. Each of these represents a major market. So SOXS will go up when semiconductors go down, and you could see what happened on Friday. Semiconductors went down and this thing was up. Doesn't look like much, but 12% on massive volume. Is it giving you a buy signal? Massive volume, that's about it. Something that I will be watching. And SQQQ is the other one. This is the Q if it breaks down. But boy, it's down in the dumps. It was up 4%. Now look over here, and you could see why you have to be careful with these. Let's just put a quarterly. A monthly is good enough. Look at where these things have come from. And that's because they do one reverse split after another. If you think there's a short-term wish down in the market, these are great ways to play it. It's not a great investment. So just to finish up, the stock that I like going into Monday that I will be looking at various ways to play, and if the market is supportive, because who knows what happens between now and then and what the futures are, but NBIX, and go back to the fundamentals very quickly because I did want to show you something, and this is a feature that I really like in TradingView, not just my little thing. So let's let it pop up. So we know the next earnings are not to May, okay? Doesn't pay a dividend, no shocker there. Big PE, so that's something that might be concerning. So I can go down here and find the last earnings and click on it, and then click on this, more INVIX financials. And then let's go to look at earnings. And this is going to tell me earnings and revenue going out. So this is what we have, Q4. And this is looking at reported estimates. Here's a $1.03, $1.23, $1.33, $1.32. So we are growing on the earnings side. And down here it shows me revenue 514, 545, 569, 583. So I can actually come in and I could look and get a sense of what's going on. And this is showing me the last reported quarters, reported versus estimates. It's a free tool that's part of TradingView. I like this. It just gives me a sense of how this thing is doing. So on that note, I hope you have an awesome, awesome, awesome week in the markets. Please register for the Wealth 365 event. Please support me. And by doing that, I don't ask for anything else. And I'll see you guys in stocksanddocs.com on Monday morning.